Good morning, everybody. I'm here today to talk to you about financial services. Bit of a dry subject, right? I'm sure a lot of you might not be that excited to hear about financial services. But I'm here to talk to you about why financial services matter, not just for you, but for the person who makes your coffee, for your neighbours, for your friends, and your family. Just to start with, I want to introduce you to somebody that I know quite well, and ask you to put yourself in his shoes. Just imagine, just for a few minutes, that you are Mac. You're from the Philippines. Back in the Philippines, you studied at university computer science, and you worked for a few years as a computer engineer. But 3 years ago, you made the decision to move to Dubai. Here in Dubai, you're working as a cleaner. Seems strange, right? Why would you, after you put in all that time studying, make that huge sacrifice by moving to a different country and working in a different job as a cleaner? Back in the Philippines, Mac earned $30 US a month to be a computer programmer, whereas here in Dubai, he earns $300 US a month. With that extra money, Mac can help his family provide for his brothers and sisters. He pays for their education, and he is paying for their healthcare costs. Over 3/4 of that $300 a month that Mac earns, he sends home to support his family. And here we are in Dubai. We've got flying taxis, we've got skyscrapers everywhere. Nearly every building is connected to the internet. In fact, I expect all of you are connected to Wi-Fi today. So it should be so easy in this day and age for Mac to send that money back to his family, right? So easy. Not quite so easy, because Mac and everybody else like Mac in the UAE and across the Gulf are prohibited from having a bank account at a traditional bank. It's very expensive for banks to maintain their cost base, and they just cannot make it work for low-income people. That means that Mac is unfortunately not alone. This is the type of service that he and his friends can access to send money back every month. Crowded, expensive, laborious exchange houses. He's so dependent on them, and because he's going to the same shop every month, he doesn't get the choice of rates that you would online, going online to use digital services. Mac is part of a bigger group in the UAE. There are 4.5 million people just like Mac in the UAE, and across the Gulf, there are 26 million people who cannot access the financial system because they are too poor. That is 70% of our population who are having to rely on those busy, crowded exchange houses to send money home to their family every month. That money is known as remittance, overseas transfers. And most people who are sending money home from the Gulf are supporting on average 5 dependents. That means there are now 130 million people who are affected by the lack of financial service access for people who are poor in the Gulf. Something else to note about these people. 98% of the low-income workers in the Gulf carry a smartphone, and they know perfectly well how to use that smartphone. There is internet coverage almost everywhere. The UAE has a goal to have that complete by 2020, and most of the other Gulf nations have similar goals to have Wi-Fi coverage everywhere. So this seems like the perfect storm, right? There's Wi-Fi coverage everywhere, people have smartphones, and there are precedents of people having an alternative type of banking. In the UK, there is a new bank called Monzo, which just gained its license last year. It's an app-only bank, so no branches. Everything is dealt with within the app. That bank has just won in a customer poll the best bank in the UK, and remember, it has no branches. The bank that it knocked off the top spot, which had held that position for 10 years, was First Direct. First Direct, another branchless bank. Customers deal with it entirely over the phone. Digital products aren't just something for established markets either. M-Pesa comes from Kenya. It's an SMS-based mobile money product, and it has been established there for 10 years. Kenya is by far the leader in establishing mobile money. Half their GDP was processed through M-Pesa last year. The openness that is created for businesses and people alike to use mobile money added $5.5 billion to their economy last year. It is huge. India has Paytm. It's so widely used now that it was their top funded business last year. Pakistan has a very similar product, EasyPayza. So if we're crying out for it and there are all these precedents around the world, why has nobody else done it before? All these people are here to do one thing in the Gulf. They are here to save and send money back to their families at home. The global remittance market, so that's overseas transfers in the Gulf, is nearly the biggest in the world. The only biggest market is America. We're sending money primarily to India, Pakistan, Bangladesh, the Philippines, Nepal. Out of the Gulf every year, $100 billion is going to those countries, sent by overseas workers. In fact, the low-income migrant population send half of that $100 billion every year. Just to give you a benchmark, the global aid market, sent by all governments and charities around the world, is worth about a third of as much as remittance. It is an enormous industry. And remember, these people in the Gulf at the moment are simply relying on those expensive, time-consuming, busy exchange shops to send money. This is our mission. This is the mission that I went on 3 years ago to change the face of banking in the Middle East for people who have been too poor to afford it until now. So I just want to give you a few little insights into why we're one of the only people who have chosen to do this. As I mentioned, it seems like the perfect storm, right? Everybody knows what mobile money is. In fact, 60% of the Gulf's migrant workers were actually using it at home before they moved here. So it took us about a year just to get a partner bank to agree to work with us to hold the funds that we wanted to keep for our users. That was one of the first steps. We then had to raise $2 million US. We spoke to about maybe over 100 different investors, and it was extremely difficult to get them to buy into our mission. Just some of the things we heard were low-income people cannot read. Low-income people will never be able to operate a smartphone. And my favorite, low-income people love queuing. They love going to an exchange house at the end of the month. In fact, that is the highlight of their month, chatting to their friends in the queue. I thought maybe they would prefer to go to the cinema or have a coffee, so we plowed on relentlessly anyway. Then, probably the biggest thing that we have to overcome, regulation. If you want to operate in financial services, there are vast amounts of regulation to comply with. And even better, you can't find that information in the public domain. It's only available to existing banks. So that's extremely difficult. You have to recruit an absolute army of advisors to help you navigate those choppy waters. Next, we had to recruit an army of coders, people who are extremely valuable to the industry that we work in and could probably have got much better paid jobs in banks or other technology companies, but they chose to join us on our mission to help serve the unbanked. We also have been threatened numerous times by people who wanted to either get in the way of our mission, were envious that we'd managed to get there before them. We've been let down time and time again by suppliers and other partners that we were supposed to work with. But we are still here. We do have a group of incredible investors who support us. We have an amazing partner bank who bought into our mission. We have incredible companies in the Gulf who chose to partner with us in our very, very early days and help their employees get access to now money so they can pay them safely into it. And most importantly, we have a huge number of people now relying on us to change the face of banking in this region. Bet you're wondering now how this slide got in here, right? This is the Spice Girls. For anybody who's not familiar with the Spice Girls, which there may be a few people here who are too young or people who managed to avoid their kind of global phenomenon. They were, in the 90s, the absolute pinnacle of success for a girl band. They went on a global crusade with their mission, Girl Power, which stood for equality between women and men around the world. The one in the middle here, in the leopard print, Mel B, she was known as the sort of mouthy one of the group who stood up for the other girls, fought for equality. I think she actually coined the phrase girl power, and her nickname, they all had their own nicknames in the band, was Scary Spice. I only learned quite recently that Scary Spice, Mel, has only just escaped an incredibly violent, domestic, abusive relationship of 10 years, a marriage where the husband that she had beat her every day, tortured her, robbed her and her children of their dignity, bullied them relentlessly, and most importantly, how did he manage to do this? In a time of 10 years where Mel had earned £80 million, by the time she was finally able to leave the relationship, she had less than £500 because this man had closed all her bank accounts and made sure that during that time he was the one who was paid her money and he controlled all their finances and accordingly everything else that happened in their lives. Pretty shocking, right? How could somebody like Mel, a strong, independent, globally recognized woman, end up in this position? You would think that people who have an income, who are strong, who can hold their own, would be much less likely to end up in that horrible, horrible position. I wish that was true. But unfortunately, women who contribute more than 67% of the household income are actually 7 times more likely to be a victim of domestic violence. 7 times more likely. 1 in 3 women are likely to be a victim of domestic violence, and Mel is just one that I highlighted to you today. And part of the reason that I decided to highlight that was just to go back to that issue of not having a bank account. Now, Mel is recognizable to you all, but this is actually a wider problem. Studies have replicated time and time again that it is not having access to a bank account that is the critical thing that keeps women in a victim position. It's not having an income. In fact, having an income actually makes you more likely to be a target. It's having access to a window of opportunity, a bank account that allows you that ticket to escape. Mel was finally able to track down a bank account back in England that she'd had as a child, and she used that to plan her escape for her and her children. Even women in rural India who have a bank account are 50% less likely to even be a victim of domestic violence if they have a bank account. When they jointly control the husband's income, that figure rises to nearly 70% less likely. It is having access to a bank account, not an income, that gives women freedom. We've talked a little bit today about some of the things that giving a bank account can help provide you. Of course, convenience is a huge one. Why should low-income people who have the smallest window of time off every week spend that time in a queue? I can assure you they don't like queuing. Secondly, value for money is a big one. Going to one store obviously provides you no freedom of choice. Being able to access rates online, of course, gives you that freedom of choice, as well as other things that could help you out, like different places and ways that you can send your money. That's huge. Window of opportunity. Now, this is massive. Only 7% of women in the Middle East and Africa have a bank account at the moment, of any type. Having access to an account has possibly one of the biggest ways that you could potentially scale reducing domestic abuse at home. I can assure you that there are people in this audience today listening who know that this could help make a difference to somebody. Don't just think of it as a window to escape either. Think of a route of progress. A basic account to start with, a current account, could lead to a savings account. That can lead to a line of credit. Maybe that could lead to building a business and other ways of independence. But financial inclusion matters. It matters for you. It matters for your friends. It matters for the person who makes you a coffee and everyone else you know. Keep talking about financial inclusion. Talk to everyone. Maybe not everybody will reveal their personal struggles to you, but maybe you could help them with their ticket to freedom. Thank you.